Hi, we have given Strata's WS Retail Fractional Ownership Opportunity 7.5 on 10. Hi, this is Raj Shah.
Hi, this is Rishi Dedia. We are from Invest in Pre-leased. We help you profit from curated pre-lease proposals.
So for this detailed analysis, we've prepared a chart as usual, and that's on your screen. If you like the kind of videos we are doing, please subscribe and hit the bell icon so that you get notifications for all our videos. So in terms of the deal evaluation, we are going to look at the following points. Number one is the tenant. The tenant happens to be a conglomerate, which is an Indian conglomerate, but is working in multiple countries. It's somebody jiska namak humne khaya hai, and it's got about 400 retail stores, 400 plus retail stores, and does over 2,700 crores of business every year. So the tenant is absolutely fantastic. Therefore, it gets one-on-one there. In terms of the tenant industry outlook, we are looking at a retail opportunity this time around. And in 2020, the Indian retail economy was 0.79 trillion US dollars, and it's going to go up to 1.5 trillion US dollars by 2030. Now, this stat is from IBEF, which is Indian Brand Equity Foundation, and it's available on their website. And Chennai being the sixth largest city in the country, we expect that the retail there is going to do well, and therefore a 0.5 on 0.5 there. Coming to tenant stickiness, we would expect the rentals to be a little lower than the market rentals, but it's in and around. So therefore, we have to take away 0.25 there. And the capital expenditure is going to be done by the tenant, so which is fantastic. Therefore, 0.25 on 0.5 overall there. Rishi, over to you for asset grade and asset location.
Sure. Thanks, Raj. So coming to the asset grade, now we always know that how important this particular point is, because this is where our capital appreciation and future appreciation scope is going to come in from. So we always know that Strata is known for bringing out quality assets from their table. So I always look forward to the Strata assets. Here, if you look at the gradation, yes, it's in red. We have given 0.511. Now, there are two reasons for that. This is a build-to-suit asset for this particular retail brand. And currently, it is at the ground zero stage where the groundbreaking is happening and the excavation work has started. So we genuinely want to wait and see how the asset turns out to be. Also, we know the developer who is going to construct this. The developer has already created a name for himself for executing these assignments for this particular brand and sister concerns. But still, we would want to ensure that we give a non-biased review, and that's the reason we would want to wait as to how the asset is actually coming up, and that's the reason we are giving 0.511. Coming to the asset location now, Ambattur is a very, very good location in terms of the retail presence that it already enjoys. Let me just run few brands like Reliance Trends, Pantaloons, Raki Cinemas, Crocodile, Reebok. Now, these are the certain brands which are already existing in the vicinity. So we know that there is definitely a strong traction towards a good retail segment coming up here. So all in all, we would definitely go ahead that this is a very good retail location, and we would want to give one-on-one. Raj, what's your take on the lock-in tenant agreement and duration?
So lock-in is 3 years, which is what we would expect as a minimum thing. So it gets 0.5 on 0.5 there. In terms of the tenant agreement signed or not, unfortunately not. It's still on the LOI stage. We would love if these opportunities come with either a agreement to lease if it's a BTS, or a lease if it's ready. So 0.0 there out of 0.5. In terms of the duration, it's an excellent 21-year agreement, which is typical, for retail, people would want to have a longer duration, which is fantastic. So 0.5 on 0.5 there. In terms of the increment, the industry standard is 5% year on year or 15% after every 3 years. In this case, it's 15% after 6 years. So therefore, we have to take away that 0.5, and therefore it gets 0 on 0.5 there. What about the rent start date and deposit?
Great. So we always recommend that the rent start has to be always immediate. Once the drawdown happens and once the asset is subscribed, the investor should start getting its yield from the day one. And in this case, even if it's a build to suit asset, the developer is going to pay the rent till the time the rent commences from the tenant. So the good part is the rent is going to start immediate. So probably if the asset gets subscribed soon, and in the month of June, if we see the paperwork to be done, then the rent starts in June, or accordingly as and when the paperwork is complete. In terms of the deposit, again, we always mention that 6 months is a standard deposit that one should be getting, and above that is actually icing on the cake. In this case, the brand has already paid 2 months of deposit as their commitment towards the property, and that's the reason we again would want to give 0.5 on 0.5. So all in all, this point gets 1-on-1 complete. Raj, what's your take on the ROI?
So the average 3-year net ROI is 7.14. Remember, we've switched from entry level net ROI to 3-year average, as we've done it in the last review onwards. So just so that the top-ups don't start affecting just the entry yields, and therefore we are taking the average. So it's 7.14. One argument is that that this is a retail opportunity, and retail typically does not fetch as good rentals as an office or a warehouse. But the point is that as an investor, they're looking at the ROI, and therefore we continue to keep 8% as the benchmark. This is lower than that, and therefore we are taking that 0.25 points away. So 0.75 on 1. And Rishi, what about capital appreciation?
Yeah. So again, हमारे local सूत्रों के अनुसार हमें ये पता चला है, this location is actually a very good bet for the retail presence. So we see a lot of traction. Again, we would want to bring to the notice that we have been very conservative and traditional with our gradation of this point, and we always say that retail will always or should grow at 3 to 5% per annum. So here, looking at the location, looking at all the mix, even if it's a build to suit, there are definitely good traction of brands that are going to come in. So we feel that this location will enjoy a good capital appreciation even in the long term. And since there is a long term commitment from the tenant as well, we feel that there is, and yes, this particular plot definitely has unused FSI potential, which is definitely another thing that we need to look at. And there is one. So, for example, what happens in this case, if in future the tenant wants to say add another 2 more floors, 3 more floors, depending on the FSI that is available, that can be added, and that will definitely add to the ROI as well, as in the rental will definitely go in. So this definitely is a very good point, and that's the reason we would want to give 0.5 on 0.5 for this particular capital appreciation point. Raj, what's your take on the exit options, exit load, or the hurdle rate?
So currently, in terms of the exit options, again, this is not as much about the opportunity or the asset manager. It's more about the ecosystem. But just to tell all our viewers, currently the exit options for fractional ownership are largely divided into 3 parts. One is the entire asset is strategically sold to a new investor, which the asset manager will decide at a particular opportunity, typically maybe 3 or 5 years. And when they find new buyer, they will get back to all the investors, and if 75% of the investors agree, they will go ahead and sell. The second option is that you go back as an investor, go back to the asset manager, in this case Strata, and say that you want to exit, and they'll find you a new buyer. And third is that you can privately look for another investor. Now, I must highlight here that there's a 1-year lock-in from the investor side. There is a 6-month lock-in, but if you sell from 6 to 12 months, the top up is going to be pulled back. So technically, I would say that this is a 1-year lock-in from the investor's side. And because the entire ecosystem is still not developed, and another point here is the hurdle rate. So how does the hurdle rate work? Currently the hurdle rate is 10%, and anything that Strata gets you as 10% over and above the 10% IRR, they'll charge you a 20% performance fee. Now, what does this mean? Let's assume that you've got 100 rupee capital invested in the property, and you get a 8 rupees rental and a 4 rupees capital appreciation. So that's 12 rupees. Now, anything above 10%. So we have an additional 2 rupees of capital appreciation above the hurdle rate, and therefore you're going to be charged 20% on that. That's going to be 40 paise. So this is how it's going to work. This is only applicable at the exit and not before that. So because coming back, the entire ecosystem is still not completely developed. Ideally, we would like a situation where an investor can get onto a portal and maybe with a couple of clicks, exit. And the time taken from the time they decide and list to sale should be maybe 5 to 6 days. That's our ideal scenario. And therefore, currently, we're just going with 0 on 0.5. Rishi, what about the asset manager?
So, asset manager is always one of the most critical elements that we always would want to bring out, because we feel that there will be one person who will be responsible for running the entire show, and they should be credible enough. In this case, we have Strata. Strata is a trendsetter in the FRE space, that is fractional ownership space. And we know that they have a good track record. They are backed by some amazing names in the industry. Just to name a few, you have Elevation Capital, you have Gruhas, you have Kotak, who are backing them. And we also know that Strata always goes an extra mile to reach out to its audience and are always accessible. So when we look at this particular scene, we know that Strata has a very good build-up and they know their trade well. So they always would want to, they're always one step ahead with regards to their approach. And that's the reason we would want to give 0.5 on 0.5 for this particular case as well. Raj, anything that you would want to give in terms of remarks?
So finally, overall, as you can see on the screen, this is a good opportunity. It is a retail opportunity. Again, a fantastic tenant, even in terms of the fact that, it's got pending FSI, and that's something that could be fantastic in terms of the overall return in the entire life cycle of the investment. And therefore, our overall, consensus is that this is something definitely worth investing in, and we give it 0.5 on 0.5 there. That makes it a total of 7.5 on 10. And if you have any questions about this particular review or about the opportunity, please call us. Our numbers are on your screen. And with that, this is Raj Shah saying goodbye.
Also, I would like to add one more point. If any of you guys feel that there is any input from you guys with regards to the gradation of the assets, or you feel that we should be including something in while grading any of the points, we are more than happy for your feedback, and we would definitely would look up to your recommendations and inputs. So with this, signing off, Rishi Dedia. Thank you.
Thank you.